They're purposely doing it to stop the assets blowing up. The reason being, our actual problem is actually demographics. There's too many old people. So what they're actually trying to do is rescue the baby boomers and rescue the governments who are trying to keep economic growth going with an indebted old population. So they're not trying to transfer money to the super wealthy. That was the unintended consequences. I don't think they understood what they were doing was debasing currency. And when they learned it, they're like, oh, this is magic. Let's just keep pressing the magic button. Assets go up and we're saved from ever a debt deflation.
Central banks, being the main entities tasked with supervising monetary policy within an economy, hold considerable sway over its financial terrain. Through mechanisms such as quantitative easing and interest rate adjustments, central banks aim to stimulate economic growth and maintain stability. However, these interventions often have unintended consequences, particularly unequal wealth distribution. And this has also sparked discussions within the realm of cryptocurrency. Cryptocurrencies, operating independently of central authorities, are seen by some as a hedge against fiat currency devaluation. Central bank interventions can drive liquidity into cryptocurrencies, impacting their prices. Raoul, financial analyst, macroeconomist, and founder and CEO of the Real Vision Group, emphasizes this issue in a discussion with Anthony Scaramucci. Pal argues that demographic trends, particularly an aging population heavily invested in equities, drive such actions from the central banks. Raoul also explains that people are seeking solutions to address the perceived flaws in the current economic system. One driving factor behind this quest for solutions is the awareness of growing debt levels and their consequences. Cryptocurrency adoption is propelled by these macroeconomic concerns and the exploration of new use cases, such as non-fungible tokens and smart contracts, which leverage blockchain technology similar to the internet's transformative impact. Additionally, the continuous debasement of fiat currencies by central banks fuels the search for assets that can serve as reliable stores of value over time. Let's take a look at clips of Raoul as he explains his insights regarding this issue. As we bring you these clips, we encourage you to show some support. Please give us a thumbs up, leave a comment, and subscribe to our channel. Your engagement helps us keep going and bring you interesting updates regarding the crypto space. We hope you enjoy the video.
Firstly, people understand that the system is broken and they're looking for answers. Some people choose gold. Some people choose Bitcoin. People use different ways of getting around this. They can feel it. It's all around you. You can see it with populism. You can see it with just how markets react. So there's this feeling that I need to find an answer here. A lot of that is being driven by, we know there's all this debt and I'm scared of it. Okay, that's good. The other thing is, what is the answer that the central banks chose, or the governments? It was create more money. So you've got this macro backdrop of debt and this fear. So that's driving adoption. And then people are finding new use cases, like NFTs for smart contract stuff. That's creating a technology adoption like anything, like the internet was. And it happens to be the fastest adoption of any technology the world has ever seen, except AI, which has been faster. But we're also finding that the central banks are debasing currency. They're making our money less valuable. So we're looking for things that are a store of value over time. That's not necessarily against goods inflation. It's against the thing that governments and central banks always do. They clip the corners off the coins until you've got no coin left. That's a way of taxing you without you knowing. And that's to pay the debts that the government has because of the aging population and all the debts out there. So those two things are driving the movement of crypto. So the crypto price is based off those two issues. The adoption of the technology, as everybody's starting to build on this new tech stack, and because it solves a lot of problems. And then it's the thing that the central banks are doing, are devaluing your currency all the time. That creates a super mega trend within this. Now, it as a space is growing on average, including the bear markets, which are brutal as we all know, it's growing at 100% a year as a space. So there are 516 million wallets as of end of last year, active wallets. If it's growing at 100%, by the end of this year, it's 1 billion. Then the end of the year after, it's 2 billion. Because So the numbers are vast as people are adopting it. Now, the difference here between this and the internet or the mobile phone is we were users of the internet and mobile phone, but we didn't make money out of it unless you happen to own the right shares. But nobody could own the infrastructure of the internet. Different parts were. Here, you can actually own the thing by owning a token. So we're getting to participate in something that has never happened for humanity, which is a global infrastructure being built by everybody around the world at the same time, and we can own a fraction of it. So this is, at an investor level, why it now matters to everybody, this is the first global, homogenous investment product the world has ever seen that can operate like this. So it's the same product. Bitcoin is Bitcoin in India as it is in Nigeria, as it is in London, as it is in Hawaii. It's the same thing. Indian investors can't trade Tesla shares. Yes, they can trade gold, but they don't have access to it because you have to go to the store and buy gold jewelry, and you've lost a lot of the markup within that. But here, anybody can get a wallet because it's on the internet, and you can send money home to your mother in the Philippines from the United States instantaneously. And by just owning one of the tokens, an Ethereum token or whatever it is, you've got a share of it. So if more people adopt it, you get richer. This is like one of the greatest schemes the world has ever seen in creating mass wealth, not for Wall Street, but for retail, who got to front run all of this, and create a new system that solves the problem of what's the investment, what the central banks and governments are doing, and solves the problem of an over-indebted society. I mean, that's how big it is.
Despite the volatile nature of the crypto market, characterized by brutal bear markets, the sector has experienced exponential growth, with the number of active wallets increasing annually, as stated by Raoul Pal. This growth shows that cryptocurrency is becoming a worldwide system that anyone can use, allowing individuals worldwide to participate and potentially benefit financially. Unlike traditional investments, where ownership of infrastructure is limited, cryptocurrency offers a unique opportunity for widespread participation and wealth creation on a global scale. Pal is very bullish on cryptocurrencies, even stating that he has allocated 100% of his liquid net worth to these digital assets. Let's explore Raoul Pal's insights on this matter, including his confident forecasts for cryptocurrency prices by the end of his discussion.
I spend a lot of time, I haven't talked a lot about it, but I spend a lot of time looking at the macroeconomy and what is going and where it's going to drive assets. And my view is that the issues we've been talking about, printing of money, excess debt, are going to be the feature of the next 2 years. How do you pay for that? And so therefore, I am very aggressively positioned in crypto, because the only other secular trend there is, I can divide any asset like the S&P 500 or real estate or gold by the central bank balance sheet, the Fed balance sheet, i.e. how much money are the Fed printing or putting on their books. And most of them are pretty flatline. Then you look at the NASDAQ and it's going up because we're getting more digital every day, so there's endless demand. And then crypto goes up exponentially, as we know. So the fastest horse in the race is crypto. So I'm actually 100% of my liquid net worth in this. And I have been actually since 2020. And I use the bear markets to add into, because I think we're in a once in a lifetime wealth accumulation opportunity for everybody. Be you rich or poor, you can still put 10% of your savings in as you go. And so that's how strongly I feel about it. It's not just a passing interest. It's not something I say on TV. It's something I actually truly believe in. I'm kind of thinking Bitcoin finishes this cycle closer to 250,000. I think a lot of people are lower. I think it might be higher because of the dynamics of the ETF and other stuff. I'm pegging Ethereum between 15 and 20,000. And I'm pegging Solana between 750 and 1,000. So my view is Bitcoin starts the cycle and outperforms in the start. Then people go out the risk curve, ETH. We're going to have an ETH ETF. We'll see the market pick up there.
Right.
But the horse that's moving faster is the one that's coming from a smaller adoption base. It moves faster.
Raoul Pal's price predictions for Bitcoin, Ethereum, and Solana are quite bold, with him forecasting Bitcoin to potentially reach $250,000 by the end of the current market cycle due to factors like the introduction of ETFs. Pal observes a trend where certain cryptocurrencies outperform others at the start of the market cycle, driven by investors seeking higher returns. He suggests that the introduction of a Bitcoin ETF could further boost its performance. Moreover, he highlights that cryptocurrencies with smaller adoption bases tend to grow faster. Cryptocurrencies with smaller adoption bases have more room for exponential growth because they are starting from a lower baseline. As more individuals and institutions begin to recognize the potential of these lesser-known cryptocurrencies, their demand increases. This increased demand can lead to rapid price appreciation as more investors flock to these assets, seeking to capitalize on their potential. Smaller cryptocurrencies also often represent newer or niche projects with innovative features or use cases. These projects may attract early adopters who are willing to take on higher levels of risk in exchange for potentially higher rewards. As these projects gain traction and prove their value proposition, they can experience rapid growth in adoption and price. However, it's important to note that higher potential returns often come with higher risks, as smaller cryptocurrencies may also be more volatile and subject to market speculation. The widespread use of cryptocurrencies around the world is bound to happen sooner or later. As technology makes them more accessible, people from all over can easily get involved. Plus, the growing recognition of how cryptocurrencies can fix financial problems and help more people join the financial system adds to their appeal. Increasing institutional acceptance and investment in cryptocurrencies bolster their legitimacy and pave the way for broader acceptance among traditional financial institutions and regulatory bodies. As they become a normal part of how businesses operate, more people will see them as a valid way to handle money. Ongoing improvements in the technology behind cryptocurrencies, such as blockchain, will also make them safer and easier to use as time goes by. These advancements help build trust and confidence in cryptocurrencies as reliable assets and tools for transactions. We hope you found the insights shared by Raoul Pal enlightening. Now, we want to hear from you. Do you believe that cryptocurrencies represent the future of finance, or do you think traditional financial systems will prevail? Share your thoughts in the comments below. And remember, your engagement with our content helps us continue to provide you with informative updates on the crypto space. So, please give this video a thumbs up, leave a comment, and don't forget to subscribe to our channel for more insightful discussions. Stay tuned for future videos where we delve deeper into the world of crypto finance, technology, and everything in between. Until next time, happy investing.